Have you ever wondered if your money is truly safe in the bank? Banks might assure you that your savings are growing, but the reality is starkly different. Despite interest accumulation, the value of your money diminishes over time due to inflation. With the cost of living skyrocketing and bank interest rates lagging far behind, your hard-earned cash is losing its purchasing power. Your money is sitting there smoldering, slowly turning to ash. In this video, we'll reveal 8 powerful assets that can protect your wealth from eroding and set you on the path to building lasting, intergenerational prosperity. Stay till the end because number 8 is never talked about, but you will see how powerful it is. Here we go with number 1, so listen closely. Earth's money. Have you ever thought about what makes money valuable? Is it just the paper it's printed on, or is there something more? Imagine if that piece of paper you call a dollar suddenly became worthless. This isn't a far-fetched scenario, considering governments keep printing more money to cover their deficits. So how can you protect your wealth against this? Let's talk about Earth's money: gold, silver, and platinum. These precious metals have been trusted for centuries to store value because they are scarce and can't be easily created. This is why many financial experts advise investing in them. Think about it. The rich always keep a portion of their portfolio in these metals for a reason. Why? Because when inflation skyrockets, the value of these metals typically rises. For instance, before the 1950s, you could buy an ounce of gold for a little over $40. Fast forward to 2024, and that same ounce is worth over $2,000. And according to Prime XBT's gold forecasts, it's expected to reach $10,000 by 2032. That's 5 times the current value in just about 10 years. While cash loses its value, gold only gets more valuable. And it's not just gold. Other precious metals like silver and platinum also outperform cash. But what if you want to invest in gold without actually buying and storing physical gold? There's a convenient solution: gold ETFs. These are affordable investment options that allow you to benefit from gold price movements without the hassle of holding physical gold. So, how will you secure your financial future? Perhaps it's time to consider adding some of Earth's money to your portfolio. Number 2. Industrial commodities. Have you ever wondered why some materials are called precious? Sure, scarcity plays a role, but there's more to it. These materials also have immense practical value, making them essential in various industries. Take silver, for instance. Did you know it's crucial in producing electronics, medical equipment, and even nuclear reactors? It's not just about jewelry or coins. Other metals like cobalt, nickel, and copper are equally vital due to their unique properties that can't be easily replaced. Consider cobalt's story. Since 2020, its demand has surged, primarily because it's key in making batteries for electric vehicles. This increased demand has driven cobalt prices from $20,000 per ton in 2012 to $40,000 in 2022. A 100% increase in just a decade. Imagine the potential boost to your investment portfolio if you had exposure to such high-demand materials. But how can you invest in these raw materials without needing a warehouse to store them or a market to sell them? Thankfully, there are practical ways to do so. You can invest in stocks of mining companies like Rio Tinto, mining-focused mutual funds, or even through derivatives like futures and options. So how can you capitalize on the growing demand for these indispensable industrial commodities? Maybe it's time to explore investment options that give you exposure to these valuable raw materials. Number 3. Safe haven currencies. Have you ever thought about how geopolitical stability affects your investments? In today's world of fiat currencies, where money isn't backed by gold, it's crucial to consider this factor. This is why many wealthy individuals choose to keep their money in Swiss banks. Why Switzerland? Known for having one of the strongest economic systems, Switzerland offers a stable geopolitical environment, making the Swiss franc a reliable safe haven during times of turmoil. We've seen this happen repeatedly. During the Eurozone debt crisis in 2009 and the global financial crisis in 2008, large sums of money flowed into Switzerland to avoid wealth erosion from currency depreciation. The Swiss franc also serves as a valuable alternative to the US dollar in international trade. For example, during the recent Russia-Ukraine crisis, when the US imposed sanctions on Russian energy trade, Russia conducted trades in Swiss francs. This increased demand for the Swiss franc, causing it to appreciate significantly against other currencies. In early 2023, one Swiss franc was worth 1.1074 US dollars, allowing Swiss franc holders to multiply their wealth rapidly. But what if you can't open a Swiss bank account? Don't worry. There are still ways to gain exposure to strong currencies like the Swiss franc, British pound, and Chinese yuan. Currency ETFs and Forex brokers, such as Forex.com, enable smaller investors to participate with as little as $100. So, perhaps it's worth considering safe haven currencies to ensure your money retains its value. Number 4. Sovereign guarantee. Have you ever taken a close look at a dollar bill? Notice the words, "This note is legal tender for all debts, public and private." But what does that really mean? Since 1971, when President Nixon ended the gold standard, the dollar has been backed solely by US law, making it valuable as a medium of exchange. Even though no fiat currency today is backed by physical assets like gold, they are all supported by the full faith and credit of their respective governments. Essentially, your money is as stable as the government behind it. This is why investing in sovereign guarantees is considered a reliable way to store value. Governments are typically the last entities to default because if they do, the entire nation would be in jeopardy. Strong governments strive to avoid such outcomes. One of the safest investments you can make with a sovereign guarantee is in government securities, or GSECs. However, it's crucial to choose GSECs from stable governments with high credit ratings. Remember the 2009 sovereign debt crisis in Greece? The country needed multiple bailouts from the IMF, Eurogroup and ECB to manage its debt. This underscores the importance of a government's global strength when investing in GSECs. In the US, you can invest in treasury bills, notes and bonds to gain exposure to sovereign guarantees. These securities typically offer better returns than keeping money in a bank account and are backed by the US government's economic strength. Small investors can easily purchase Treasury securities directly from the government through the Treasury Direct portal or from the secondary market. So, how can you ensure your money stays safe and grows? Investing in government securities might be the key, leveraging the stability and strength of a nation's economy. Number 5, value stocks and mutual funds. Are you looking for better returns on your investments, but worried about taking on too much risk? While treasury investments are safer than cash, they often yield lower returns compared to stocks. If you want higher returns, stocks are an excellent option, but not all stocks carry the same level of risk. The stock market is broadly categorized into two types: value stocks and growth stocks. Growth stocks, like those in the tech sector, are riskier because they deal with innovative ideas and technologies that may or may not succeed. On the other hand, value stocks, such as those from established companies like Nucor in industrial metals, are less risky due to their stable and ongoing demand. Value stocks with strong fundamentals offer steady price appreciation and reliable dividends, making them a great choice for more conservative investors seeking higher returns. However, researching individual value stocks can be time-consuming and complex for the average investor. That's where dividend-focused mutual funds come in handy. These funds, like the Vanguard High Dividend Yield Index Fund Admiral shares, have a history of stable dividend payouts and are designed to provide steady returns. They offer an affordable and convenient way for retail investors to benefit from the stability of value stocks without the need for extensive research. So, how can you achieve higher returns without diving into risky investments? Consider adding value stocks or dividend-focused mutual funds to your portfolio. They offer a balanced approach to growing your wealth while keeping risk at a manageable level. Number 6. Land and real estate. Have you ever wondered why land is considered a non-depreciable asset by accountants? The reason is simple. It's scarce and perpetually in demand. From the dawn of civilization, land has been one of the most valuable resources. We need it for homes, schools, factories, agriculture and commercial spaces. With the human population continuously growing, the demand for land will never diminish. Residential homes, office spaces, and commercial properties built on land also remain in constant demand. This makes both land and real estate excellent hedges against inflation. Consider this. According to a Bloomberg study, housing prices have tripled from 1992 to the 2020s, despite the significant downturn during the 2008 housing bubble. Thus, having real estate in your investment portfolio is beneficial, especially when the dollar loses value. Many small investors think about entering the real estate market later in life, often focusing on owning a home. While owning a fully paid-up home is a common goal for your 40s, it's wise to consider real estate investments at any age. Contrary to popular belief, you don't need a fortune to get started in real estate. Real estate investment trusts, REITs, offer an accessible way to invest in real estate. REITs are like mutual funds, but for properties. One of the most popular REITs in the US is Ventas Inc., VTR, which invests in healthcare real estate, including senior housing, research facilities, and hospitals. Alternatively, you can invest in rental properties, using rental income to cover expenses and mortgage payments, potentially generating profit. So how can you diversify your portfolio and protect against inflation? Consider adding land or real estate investments. Whether through direct property ownership or REITs, real estate can be a valuable and enduring addition to your financial strategy. Number 7 is collectibles. Have you ever wondered why some people spend millions on vintage cars, rare art, or limited edition watches? These items, along with handcrafted luxury handbags and first editions of iconic books, fall into a fascinating asset class, collectibles. Unlike regular cars, which lose half their value the moment they're driven off the lot, vintage cars appreciate over time. They get more valuable, much like fine wine. Consider this. In 2022, a 1955 Mercedes-Benz 300 SLR Uhlenhaut Coupe sold for an astounding €135 million, according to Autocar. Only 2 of these cars were ever made, making them extremely rare and highly coveted by car enthusiasts. Similarly, Leonardo da Vinci's controversial painting Salvator Mundi was purchased for a staggering $450 million at a Christie's auction in 2017. Why do the wealthy invest so heavily in such unique pieces? These limited edition items are timeless repositories of value. They can command incredibly high prices if you find the right buyer. But what about average investors who might feel that collecting rare items is out of reach? Thankfully, there are ways to get involved in the world of collectibles without needing a fortune. Online marketplaces like Whatnot make it easy to buy and sell rare baseball cards, comic books, action figures, and more. And if owning an entire collectible item is too expensive, platforms like Otis and Masterworks allow you to invest in fractional ownership, giving you a stake in valuable assets without breaking the bank. So, how can you diversify your investments with something unique and potentially very lucrative? Consider exploring the world of collectibles. Whether it's through buying and selling on specialized marketplaces or investing in fractional ownership, Collectibles can be a thrilling and rewarding addition to your investment portfolio. Since you made it this far, I can see you're serious about building wealth and getting rich. If you already subscribe to my channel, then you know I am dedicated to bringing you life-transformative information about making and keeping money. And if you're not a subscriber, then just hit the button now. Thank you, I really appreciate it. Now for number 8, farmland, a timeless and tangible asset. Farmland is an often overlooked but highly reliable asset that provides a safer alternative to keeping money in the bank. This age-old investment is rooted in the essential nature of food production and the increasing global demand for agricultural products. Unlike volatile financial markets, farmland offers stability, tangible value, and a steady source of income, making it a compelling option for those looking to safeguard their wealth. One of the key reasons farmland is considered safer than keeping money in the bank is its intrinsic value. Land is a finite resource, and as the global population grows, the demand for food continues to rise. This fundamental need ensures that farmland will always hold significant value. In contrast to fiat currency, which can be devalued through inflation and economic policy changes, the value of farmland tends to appreciate over time due to its scarcity and the essential nature of its output. Moreover, farmland generates consistent returns through the production of crops and livestock. This steady income stream can provide a reliable hedge against inflation. As the cost of living rises, the price of agricultural products typically increases as well, ensuring that the income from farmland keeps pace with or exceeds inflation. This ability to generate regular inflation-adjusted income makes farmland a particularly attractive investment compared to low-interest bank accounts that often fail to keep up with inflation rates. Investing in farmland also offers the benefit of diversification. Traditional investments like stocks and bonds can be highly volatile and are often correlated with broader economic conditions. Farmland, on the other hand, tends to have low correlation with these markets, providing a buffer against economic downturns. Additionally, technological advancements and sustainable farming practices are continually enhancing the productivity and profitability of agricultural land, further boosting its long-term investment potential. Furthermore, owning farmland connects investors to a tangible asset. Unlike abstract financial instruments, land is a physical, usable resource that can be seen and touched. This tangibility provides a sense of security and permanence that is unmatched by digital or paper assets. In times of economic uncertainty, having a portion of your wealth invested in something as concrete as farmland can offer peace of mind. This perspective is shared by some of the world's wealthiest individuals. Notably, Bill Gates, co-founder of Microsoft, has become the largest private owner of farmland in the United States, with over 242,000 acres under his ownership. Similarly, Warren Buffett, renowned investor and CEO of Berkshire Hathaway, has long advocated for farmland as a stable and productive investment. Their substantial investments in farmland underscore its value as a secure and profitable asset class, demonstrating that even the most successful and savvy investors recognize the enduring benefits of owning agricultural land. Farmland stands out as a secure and prudent investment choice. Its inherent value, capacity to generate inflation-protected income, and role in diversifying a portfolio make it a robust alternative to traditional savings accounts. As global demand for food and agricultural products continues to grow, farmland not only preserves wealth, but also contributes to a sustainable and essential sector of the economy. Now I know you're saying, if I had any money, I would protect it by investing in some of these. So, you need to figure out how to increase your income. Well, I know exactly what you need then. Watch this video next. 22 powerful secrets to get rich faster. Or maybe you are looking for some quick investments that don't require a lot of capital up front. For that, click on the one to the left. Go ahead and click on one of these videos now and let's build big money.